So the US debt was just downgraded by Fitch, who nobody knows who it actually is, but it looks like the market's going to take it pretty serious, right? So what's going on here with the US debt market? We're going to talk, is this a real risk to pay attention to? Is this something serious? Is it another bear case that just will be defeated in the end, right? What's going on here with the um, US debt? So the most important thing to simplify everything here, they're downgrading the US debt and they are citing that the debt ceiling uncertainty with going forward with the with Congress, with the presidents, I'm sorry, with the political chaos going on, signing the debt ceiling is a risk. They cited a couple things that were a risk, but the biggest really issue in this whole debt ceiling debacle is that, right? Not the debt ceiling debacle, but the downgrade of the debt is that the US is in debt GDP 100%, right? That's the issue here. And we're seeing treasury yields start to climb here. And what this is signaling is, oh, you're going to downgrade the debt? Well, we should sell US debt. Then we should get rid of it. We shouldn't be owning more treasuries. We're seeing the treasury market actually fall here, right? Bonds go lower as the yield goes up. And so this higher yield means higher rates, possibly stickier for longer. And the real issue, like I said, is you have GDP, gross domestic product, or total spending, and then you have your debt, right? You have how much debt you have in the US. And the problem with the US right now is that, let's say you have $100, right? So the thing we can see this $100 of GDP every year, whatever it is. Well, now your total debt is $100, right? It's actually over $100. So our debt, oh man, that is terrible. But our debt is basically 100% of our GDP. And I think that's the real issue, if anything, not, okay, the political chaos. Well, we know they're always going to increase the debt ceiling. We know we're at record high debt. That's always going to happen. The real issue is, how do you get GDP lower? Why do we, when do we do that? So the risk is that they may default in the future. The risk is that these interest payments for the US are higher than they've been, right? The interest payments are nearing $1 trillion a year. And so the taxes can't take care of it, right? So usually what happens is you have the Fed come in with the Fed balance sheet, and at some point they start monetizing the debt, but that is not happening here, right? This is going to stay downgraded. And I don't know how risky it is for the market. We'll see. I mean, there's a lot of people shorting the US Treasury. As a matter of fact, it is the highest shorts in history, right? Highest short positioning in history for the US Treasury market. So everybody's betting that that the rates go higher. So the Fed balance sheet is making new lows. Remember, this is one of the risks we talked about earlier in the year, which is if the Fed's balance sheet continues to draw down, then we're not getting that support. But at some point, this is going to hit the economy. Right now, the economy is still good, so we're straight, right? The economy is solid. It's hanging in there. It's not accelerating a little bit in services, but at some point, we're going to see this Fed balance sheet start to step in. This is why we track this the end of every month. And typically, like they do in Japan, is this balance sheet will start to move up. And Japan just started doing that, by the way. And what they're doing is they're trying to bring these yields down. They start purchasing bonds to get the yields down, right? We're not seeing that yet. As a matter of fact, if we go to the actual bond market, we're seeing a complete dump, right? We're seeing a complete dump in the bond market. And how funny that the US, the Fed's balance sheet looks like it's pretty much equal to the dump in treasuries, because they're literally dumping treasuries, right? The Fed is literally dumping treasuries every single month. And now people are dumping treasuries because they're like, oh, okay, FOMO, the reverse FOMO, right? Let's get out of US treasuries. And the problem with the stock market, the problem with risk assets is that, your rates are now higher. So to fund growth, it's going to become more expensive if this continues to happen. Now, as a consequence of rates going higher, as a consequence of these bonds, basically getting sold off, this could be China, this could be Japan, this could be foreign sovereign countries who are actually dumping the US Treasury debt just because they have to, right? Because it got downgraded. And now you're getting that move down in bonds. Yields are going higher. The 10-year, right? Rates on houses are going to go higher. That's going to constrain the economy. That's going to constrain buyers and even further, it'll also bring down inflation. This is why bonds go higher, to bring down inflation. So you do have that coming into play. But the biggest consequence here, and the reason why the market is not going to catch any legs, is that it also makes the dollar move higher, and the dollar is the wrecking ball. Don't forget, the dollar is the wrecking ball. When it moves up sharply, it rocks all of the markets. So we're not going to get a bid until the dollar comes back down. So how risky is this? We'll get to the questions. How risky is this downgrade? Honestly, I don't even think it's that big of a deal. I don't think it's that serious. It happened in 2011, and there was a sharp sell-off in the U.S. Treasury. But we get information, or there's a sharp sell-off in the stock market. But information travels so quickly. What you see now is what's getting priced in, right? So we did get that. We did get the S&P gap down tremendously, big gap down, right? This is the big gap down. We got the Qs also gapping down right back into support. And hey, we're just coming back into support. This is not a huge sell-off. Some people are expecting 5%, right? Which would take us, let's say, from the gap, 5% would take us back to the consolidation zone, right, for the Qs, which could be a healthy drawdown. It could be a healthy drawdown, but guess what? People are going to chase. So we'll evaluate the macro forces. How are those reacting to that? We're seeing that credit from, U.S. debt credit also dropped. So this is a big risk-off move, and I think a lot of it is coming from the dollar. But on the flip side, oil is getting resisted, right? We're seeing oil hit, and I think oil continues to get stuck here. There's just not a whole lot of demand, right? Everything points to slower growth. So oil, this could have been just a carry trade for oil. A lot of traders getting long oil. If we don't get above this level, then I think the risks come off the table more than anything. The bigger risk right now is the dollar keeps surging. And if it keeps surging, then, we know by default that's going to push down risk assets. That's going to push us lower. So, it's risk off. Currently, if we break out, that's really risk off. But it's gonna be Treasuries breaking to new highs. It looks like they want to break out. I don't see it happening yet because the Fed or the U.S. Treasury, Janet Yellen, is likely to step in and start some type of program to buy back these U.S. Treasuries, right? We're not going to default. They will just continue to print more money. Now, before we move on, I'll get to some of these questions because I know there's a lot of questions here. Good morning. How you guys doing? Hassan, Fibonacci, what up? I thought Yellen said Fitch downgrade off of outdated data. Exactly. Yeah. Well, yeah, that's what I'm getting to is Yellen's going to say whatever she has to say. And the real risk for us isn't what Fitch said. It's the fact that US GDP, it's that the bond market is actually responding, right? The bond market is responding by climbing higher, and that tightens financial conditions. So, hey, maybe that's good, right? If you're holding cash, you're going to benefit more. If you're holding US Treasuries, or if you're buying US Treasuries, you're going to get higher yield off this. You're going to get higher yield. So it's kind of a nothing burger. I think it's just more neutral because, yeah, there's a sell-off in U.S. bonds. There's a sort of sell-off in U.S. bonds, but there's also going to be a rotation somewhere. So if people are piling into U.S. dollars, then what's happening right now with the U.S. dollar? The more dollars you hold, the more you park at the banks, the bigger yield you have. As a matter of fact, there was a couple of reports yesterday that showed, compared to last year, people are collecting $100 billion more of yield because interest rates went up. So interest rates going higher actually has helped consumers who save dollars, right? Savers, people who don't have a lot of debt, who don't really have debt and have a lot of cash, they're able to spend more. They're stronger. Their household is stronger. Also, if you locked in rates rates at 3% over the past couple of years before rates went up, the rate rise doesn't really affect you that much, right? It's more so inflation. So I think it's kind of neutral, and we got to watch the dollar. What is the dollar going to do? The dollar is going to kind of point us in that direction, whether it's going to slide more if that neutrality is going to slide more to risk, or if it's going to remain neutral. Now, I think the TGA, like we're going to take a look at the reverse repo facility, because the question is, and I think there's still a lot of liquidity in the reverse repo that can plug these holes, right? These liquidity holes. You got the U.S. Treasury also issuing more debt. Who's going to buy it? I think it just comes from the reverse repo facility. right? I think it just comes from the reverse repo. I'll throw that on there too also before we get to the question. So 300% SPY swing, 454 from yesterday. Oh, you swung it to the downside, Slime Z? Okay. Is the market going to tank more today, or the bull damage is done? Thoughts? Yeah, we'll look at the technicals right now. I just want to kind of give the real critical thing here is like, hey, it's rates, it's interest rates going higher. This is literally going to tighten financial conditions, right? This is the 10-year. We usually use that as the benchmark. If we go to the 2-year, also at the highs, right? And the question is, hey, if it does break out, that's going to cause more market risk. The dollar goes higher, and that's going to squeeze a lot of not squeeze. It's going to squeeze a lot of people. So if the dollar goes higher, then that is the market risk. We talked about this for a while. Higher dollar, higher yields, higher oil is the big risk, right? So we look at the VIX and we see, okay, does the VIX telling us this is a big risk? Well, it did have a large gap up. This was the biggest gap up. And I don't think, again, it's the downgrade. I think what it is it's the liquidity outlook going forward. The liquidity outlook is, okay, well, the reverse repo stepped in last time the U.S. Treasury issued all these bonds. But this time around, right? This time around, who's going to buy up all those bonds? Are we sure that the reverse repo facility, the people parking their cash there, are going to start buying treasuries? Because the Fed raised rates again, so they're getting more, right? They're getting more interest at the Fed, at the reverse repo facility. They have no reason to leave. So that's the problem that we're running into now is the banking sector is mandated to buy U.S. treasuries. You drain liquidity, right? So we look at global liquidity, net liquidity here. Global net liquidity. Hey, where's the indicator? Oh, no way. They changed it? Did they change it? Global net liquidity? That's weird. That's weird. The the indicator was removed. Wow. I guess the Bears didn't like that one. Okay. Well, global net liquidity. Yeah, let's get off of that. Global net liquidity is coming down. So we have less liquidity. And the question is, who's going to step in to fulfill that liquidity? Will the Fed balance sheet go up? I don't know. I really don't know. We're going to keep our eye on this though. Yeah, ADP payrolls came in hot. Government, yeah, there's like the economy is not going to slow down. It's just not going to slow down at this point. We're not seeing no slowdown in the economy. And what it looks like is the hotter the economy is, I think it's still it all comes down to inflation. Here, this guy is talking right now. Let me pause this. So he says the erosion of the downgrade. So let's just go. He's just talking right now. The erosion of the downgrade, repeated debt limit, political standoffs, last minute resolutions have eroded confidence in fiscal management. So it's more of a sentiment gauge on this. If this reverses at any point, Janet Yellen's going to speak. My bet is she comes out and talks about this to calm markets down, to calm the debt market. And another risk that we got to look at is the move index. Did we get big bond volatility? Right? Did bond volatility, start to move up a little bit? It's not really spiking, but this would be the real issue. Is that this really tells us if the bond market's going to have issues, right? And the issue with the bond market is if nobody buys the bonds, then yields keep going higher, interest rates keep going higher, and that's going to tighten everything, right? Because the real interest rates to the market aren't necessarily the Fed funds rate; it is the bond yields, right? It's the yields, it is the actual bonds, which I know is very confusing to explain to people who are new, who haven't really heard about it. But that's the next risk. Is it spiking? No, not yet, right? If we break to new highs, then we'll be in trouble. But there could be a wall here. We've got rejected at this level multiple times, 1, 2, 3, 4, 5. So we got to keep our eye on this. But if the 10-year yield gets above 4.25, then yeah, the market's definitely going to have a meltdown. And we'll go look at the supports. Where are the supports at? Where's resistance at? Where could we retrace into? Because this is market panic, and we still have earnings. So I wouldn't discount like, hey, earnings could still give us some support here. And it looks like we are at the previous. Actually, let me turn this into the 30-minute chart. It looks like we are at support currently, right? Let me remove the extended hours here, and then I'll get to some of these other questions. I saw you in the chat. Some of you guys in the chat, Tucker, Yeah, I bought 456 and bought puts. One dated option sold that open today. Nice. Okay. Dang, 300%. Yeah, people are getting short, right? So you got a lot of short positioning coming into the market, and we're gonna switch to the other chart so we can get a little more in depth on it. But yeah, what are your questions here or comments too? Also, I know people are freaking out at this point. What up, Spike Dodgeball? What's up, Tucker? Overdone. This guy is too bullish. I mean, yeah, until we really drop technicals and macro, I'm gonna stay bullish, right? Inflation expectations are still coming down. If we print beneath 3%, the market's gonna take that as a very positive. Is very positive. Just a lot of people need this pullback, right? They want the market to roll over. If it does roll over, it's just going back to support. And earnings have been getting 80% of companies so far have beat earnings projections, which is above the 5 and 10-year average. So earnings are starting to bottom, right? The economy is returning, the economy is recovering. So what is your reason to remain extremely bearish? Are you bearish today? Okay, great. Me too. Today is a bearish day. This might be a bearish week. We might have a bearish month, right? On average, it is September, it is August and September that are weak months. Okay, that doesn't make the trend bearish. That doesn't turn us back into a bear market. We're near the highs, right? The rally is expanding. So bearish in the next couple days, sure, right? That's not really a problem. Now, did you see my prediction yesterday? No, I did not. What was your prediction? I mean, everybody's been calling for a pullback in the S&P. You can say it every day, right? And then when it happens, were you really right, or did you just, eventually some type of risk came off the table? Actually, I don't know. You tell me, Adima Yush, what was your prediction? I don't remember exactly what your prediction was. All right, so what do we got here? And I'm going to get to all these comments first. I think that we come back at least half of the losses from here. Tucker, yield down right now, 2, 3, 5-year yield down. The yields are down, are they? Let's see. We're looking at them right now. I mean, yields did spike. They are up on the day. Watch. Let me go to the daily chart. So yields are up on the day, but they're not making a sharp upside move, right? Look at the 2-year. This is the daily chart. This candle is not spiking. It's still finding resistance. This is the 2-year yield. So the bonds in the short side are actually not being sold off very sharply, right? 5-year yield. Okay. It is making new highs for the month. It is making new highs for the month, but it's not really spiking that much. 10-year made the biggest move. So long dated bonds are actually at a 6-month high. So long dated bonds, people are dumping the long dated bonds, and part of that reason could be that there's not enough yield. You're at 4.1%, right? Does that make sense? I mean, let's just kind of use common sense here. Let's use common sense here. If the money market funds are paying 4.5%, right? And the 10 years paying 4%, 4.1%. Well, you're going to sell the 10-year. You're like, well, I'm not getting enough yield on that. And the US got downgraded and the economy's starting to return. Well, I don't think it's worth it, right? Remember, the US Treasury is selling, or I'm sorry, the money market funds are paying more than this. But as you go down the curve, you go to the 5 years paying 4.25. So it's a little better, right? The 2-year is not really moving at all because it's paying 5%. So all that's happening is that risk is moving from the long end of the curve, long dated bonds, to the short end, right? It's moving to the short end, or it's not really selling off on the short end. It's just selling off on the long end because of the yield. It's literally all about the yield. The money market fund is paying 5.5%. I don't know exactly what they're paying, but we do know is that the more attractive a yield is, that's fixed income. That's where people are going to move towards. The less attractive, they're going to move out of it, right? But we're still not seeing tremendous collapse anywhere. I mean, TLT just got crushed. Don't get me wrong. That was a big downside move on TLT, but there is a record short positioning. So I expect them to start covering down here as soon as Janet Yellen comes in. She will come in and start speaking. She's going to try to calm the market, say there is no debt problem. And remember, they might implement a program to start buying back treasuries. That's what they do. That's what the Bank of Japan does. It's called yield curve control. And they just started it again, where they start buying back their own treasuries to control or to to reduce the amount of volatility in the bond market, right? Usually the Fed will do that or the US Treasury will do that. So we'll stay up with that. But anyways, yeah, that's what's going on there. Yield isn't up too much. The downgrade may cause less liquidity, hence Fed no more rate hikes. Yeah, that's I agree with you, Tucker. I like that. This is gonna slow things down. And all we're really in a neutral position here. Any risk that comes on the table turns into a slight positive because that means the Fed stops hiking, right? But at the same time, any positive news like the economy is stronger than expected is also kind of negative because the Fed might keep hiking. So we're really in neutral zone, and the question is, what is the non-neutral? The non-neutral is earnings. Can earnings bottom here, right? Who cares if revenue comes down when the actual earnings, the actual EPS, the actual margins are starting to expand again from the bottom? Everything else stays neutral. The market goes higher, right? And really, you got to focus on this. We keep saying it. It is literally is oil. Oil is still going to be the biggest risk to the market. And this type of risk takes demand away net. It removes demand. And oil can't just keep chugging higher when global economies are slow. We got the Chinese PMI also, which we will go over. And China is still struggling, right? Their economy is not collapsing, but they're still struggling. They're not finding a whole lot of growth right now. And they just got downgraded, not downgraded, but they got revised lower for the rest of 2023 when it comes to demand. So there goes your demand. The summer is pretty much over. Everybody said, oh, the summer will launch oil higher. Well, it did go higher. It's up like 17, 18%. The question is, do we get above 83? Is that the real risk? Right. So that's what I would say. That is, you get one pullback and people freak out. It's crazy. You need a pullback, right? It's not healthy for the market to keep just continuously moving higher. You want to pull back because there's buyers waiting to buy. If you just keep going up, there's going to be a nasty correction. They are not 10-year up. Yep, Tucker. Yeah, the 10-year is the only one that made a meaningful move, it looks like, and that's why it's dumping because, I mean, the yield is lower than the money market fund. So I would suspect money markets will fluctuate. Yep, higher yield money market. Yeah, exactly. Higher yields in the money markets. Neutral zone until 6 months later. So 2024 will have max pain, lag effects of money printer. So invest. Yeah, we might. Those lag effects are on the rate hikes. I mean, they're kind of getting neutralized by the fiscal policy. That's what I would say. The lag effects are getting neutralized by the fiscal policy. And if anything does start to slow in 2024, I mean, the easiest thing for the Fed to do is literally reverse course, and this Fed balance sheet just goes up. And as soon as it goes up, the market's going to bid higher, right? Because I mean, a lot of it is correlated with liquidity. So as soon as the Fed's balance sheet starts to bump back up, because the economy is slow, they start their QE program in 2024. Again, they cut rates and they slowly stop their purchase. The market's going to go up. It's going to look forward to that. So really, we're kind of in we're in a scenario where as long as inflation comes down, the real risk is inflation. That hasn't changed yet. It's not growth. It's not the bond market. Those things can be taken care of, but you can't really, you can't really get rid of inflation with your tools. You can slow down demand with your tools. You need more supply. You need more productivity. So what else we got here? Oh yeah, we didn't even go over the ADP employment change really quick. We'll hit that really quick. So employment still strong, extremely strong, especially for governments. We know because of the fiscal policy, that's what's happening, right? So we expect payrolls to come out also strong, right? I think that is the only news for today other than earnings, and earnings are beating. We got Chinese PMI, more Chinese PMIs later on in the day. I think was it with the BOJ monetary policy minutes. Bank of Japan buying back treasuries, or not treasuries, but they're buying back their bonds again. And tomorrow we get some euro inflation numbers. More for the US, it's going to be more labor market activity. We get the ISM services. So this is going to be important for me to look at ISM services tomorrow, which is how is the service economy doing? Right? The big risk is that services start to roll over as manufacturing continues to fall. But manufacturing we saw is bottoming. Manufacturing is starting to bottom out. It's slowing down. It's not collapsing anymore. And if we get services continuing to expand, then the economy is fine. right? The economy's fine. And guess what? If unemployment ticks up, well, that puts more pressure on the Fed to stop, and the market likes it. So again, we're in a neutral zone, and it's going to come down 100%. We're in a neutral zone, and it's going to come down to, for stock market anyway, crypto's different, right? Crypto needs regulation. Crypto needs the regulation front to improve. Not much else to say there. MicroStrategy's over here about to sell more of their stock and buy back more crypto, buy back more Bitcoin. By the way, MicroStrategy finally showing us the pullback, right? Finally giving that big MSTR, finally giving that big pullback for for a buying opportunity. We haven't seen this. Well, we have seen it, but let's see, zone in there. Yeah, we haven't seen this for a while. So MicroStrategy, let's take this off. It's finally starting to pull back a little bit. Now, is it ready? Are we ready? No, I want to see the Qs bottom out. I want to see the S&P bottom out. We will go over those technicals in a second. Here's the positive from my standpoint. Here's what I see. The positive is oil is starting to hit resistance, right? Big candle. That doesn't mean much, but we got rejected at 82.40 for oil, right? Big candle swallowing the last two candles on the daily chart. So lower oil, hey, the market is fine because inflation will continue to decelerate. Lower than the last ADP. Yeah, it's going to fluctuate. ADP payrolls are going to fluctuate. I'm not worried about that. As long as they remain positive, I think we're, there's not really a big issue there. Everything's kind of neutral. That's what we're seeing. It's kind of neutral. It's like there's some positives, there's some negatives. People are saying good news is bad news is good news, and the market changes. So far, what we have seen is the market is resilient, right? Because earnings are bottoming. It's not because yields, right? Yields have been climbing and the market's still going up. I still think the easiest parameter for market is US dollar, right? That's been the best signal. It is no longer US Treasury yields. It does bring risk, but yields have been pretty sticky and the market still went up. But when the dollar spikes, the market comes down. And the easy way to look at that, like I've said before, is just, hey, if you see a big sell off in the market and you see the dollar go up, well, people are selling their equities into US dollars, right? That's not exactly what's going on, but it's an easy way to understand how that works. You see the dollar sell off, well, that risk is going somewhere. Those dollars are going to be reinvested somewhere. Okay. What else do we got here? Pricing down. Oh shoot, I missed a couple, but hey, thanks for the comments. Good stuff there. Hey, good trade though. Nice trade on the S&P. That always feels good. Yeah, you got to trade the downside too. If you're a trader, trade the downside. Collect some of that alpha. I don't get the squeeze. People are talking about BTC or crypto. There's a lot of people short Bitcoin and I would say Bitcoin. Crypto, most of crypto is trash. It is. Most of it is trash. But Bitcoin, Ethereum, there's a couple other projects that'll survive that have real value. They're not just trades. Somebody created a coin yesterday. It went up like 100 and something percent, and then it just sold off 85%. So, most of crypto, just like penny stocks, a lot of it is trash. They're trades, but Bitcoin, definitely there's a short squeeze on Bitcoin. Now, if you're talking about MicroStrategy, the short squeeze on MicroStrategy, then I would say MicroStrategy has a lot of short interest in it, and that if Bitcoin starts to move up, it's definitely going to squeeze a lot of the shorts, and a lot of people are piling in MicroStrategy to go short even further. So I was waiting for this pullback after earnings to see if it's worth taking. What else do we got here? That will drag markets down. So buy the dip will correct self. Yep, pricing down. People are buying the dip. We are super, super bullish. Don't have shaky hands. Big man's coming. Learn to hedge and not go all in. That's it. Markets always has opportunities. Just have to learn all the Yeah, there's a lot of strategies, a lot of opportunities. You got to put time in the market. The safest thing to do is just buy the big dips on the assets you like and just wait, right? If you want to learn how to trade, well, there's so many strategies. You just got to know what you're doing. So again, like we've kind of called out, or we've been talking about, if the S&P is dropping its support, we're beneath what, 450. I'm going to switch to the other chart so we can get a little more technicals here, but it looks like we're headed into that. Before we go there though, let's take a look at everything is selling off. Equal weight, IWM, Dow, and they're not humongous. Let's look at I think I saw healthcare was up this morning. So industrials, right? These are daily charts. So you're just looking at that last candle. Industrials didn't really move too much. Healthcare actually is up today. So right now, the healthcare ETF, there's a rotation into healthcare, right? Utilities down, discretionary down. Oh, look at that. Rotation into staples. So that makes sense. Defensive stocks, right? If people are getting a little defensive, there's a lot of dividend companies in there. They're rushing into staples. And the story so far this year is there is FOMO, not just in the Qs and technology. There's been FOMO into higher yielding fixed income, which are going to be dividend stocks and US Treasuries. Even though the Treasury market's selling off, there is some people going in. There's a lot of flows into Treasuries, and there's flows into the money market funds, which is cash. That's the safest haven because cash doesn't move. Cash doesn't move much, and it's going to yield you 4.5%. So that's been the story so far. Anyway, staples are up. Defensive stocks are up. So you got defensive stocks up. You have healthcare up. You have, and this is just S&P, by the way. Real estate's down, ITB's down, SMH is down, KRE is down. So yeah, it looks like you just have defensive stocks and healthcare up on the day so far. Everything else is pretty red, right? If everything was red, then we might be a little more concerned. And significantly red, not just a little bit, right? Gold down, gold is down. Bitcoin is down. Is Bitcoin down? Yeah, Bitcoin's down. Really didn't even move. Bitcoin really didn't move. Doesn't care. Ethereum doesn't really care too much. I think the biggest move was S&P and Qs, right? Big mega cap tech is having the biggest move lower. HYG credit, US credit down. Triple B spread. Okay, where's the triple B spreads? That's where we also see. Oh, triple B spreads aren't even moving. Okay, let me invert this so you guys can see what I'm talking about here. When we invert and you don't want it at the log scale, we invert this. This is the bid in US equity debt. This is a bid on equity debt, all right? And that's still going higher. So, hey, there's still being there's risk is still being taken in equities through the debt market, right? Through buying US debt for equities, not US Treasury debt. So this is the spread between equities and what you're seeing here is that people are probably dumping Treasuries for equity. That's a simple way to look at it. Everything's a little more complex, but that's a simple way to look at it. All right, let's switch over to let's do the technicals, and I'll get to the rest of the comments. Let's do the technicals on what we're seeing here. Let's look at the technicals for where the S&P can come into. So you got the Slimesy, you got the Tesla puts at 254.60, strike at 242.50, sold at 253.70. You're smashing it. Hey, keep it up, man. Where's my button at? Keep trading, getting better. It's always nice when you could trade the downside too, right? Good job there, man. Oh, no, not the loop. Let me take the loop off, right? So, hey, people, I think when the market pulls back, what you're going to see is as we continue to pull back in the market, if we get to the levels in the S&P that are far enough to the downside, you get bye, right? That's what's going to happen. And yeah, I think there's a lot of cash, there's a lot of liquidity waiting to suck up more risk at the bottom. All right, so yeah, let's get back to that. Let's get to the actual. Let's look at the levels here, and then I'll look at the markets. There we go. Let's get. All right, so we'll start with S&P. Dang, Zoom's coming down on me. I think Zoom's gonna have pretty good earnings though, so not too worried. TDOC I think is getting crushed, but let's start with the S&P. Let's do the technicals here. What are we looking at? Oh, we are definitely dropping support on the S&P. Is that a good fit on the screen? All right, there we go. All right, so we'll start with the daily chart. And actually, let's scoop up the. Actually, no. Let's take these. Let's take these pre-market levels off, and then we'll start on the 30-minute chart. Okay, so here's our technicals. Before I start going on the technicals, you also have Teladoc Zoom down today. Yep, down big. OSK defensive. Overstock.com, is that what that is? Buying gas. UNG. Yeah. Hey, commodities might bounce, right? If you believe there's not a whole lot of demand, I don't know. Dow is bouncing right now, but UNG is down a lot. Yes. If you can get 5.25 in money market dividend stocks are not attractive. Yeah, because dividends are a little. The only thing that makes the dividend stocks more attractive is the fact that they can actually appreciate in value. So I would say at the top of the market, which nobody can actually predict, right? It's a trade-off. Risk-free money market fund money is great. Risk-free, there's no risk in it. So if you're looking to buy a house the next year, yeah, that makes sense. You're protecting your capital. But if you're going for dividend returns and you're looking 10 years out, well, that cash isn't going to be up there for that long, and you're not going to get appreciation on your cash. So it depends on your situation. I'd say if you're looking for an investment, the money market fund sucks. But if you're looking for a safe purchase or protect your capital, then yeah, it's a great bet. Looking for run, a lot of people looking for run. Sounds like a solar stock. Spy's fine, spying on the technicals. This just the beginning. This Dima Yush, what do you mean? Just the beginning of what? Technically the S&P is beneath support though. We are beneath support. Looks pretty nasty. So we have broken the trend. We got we gapped. Man, we actually gapped. We filled the gap, kept going. Pretty nasty reversal so far. Fed next hike due to labor market, energy market. Well, if the Fed hikes, doesn't that push down energy, right? Okay, cool. So S&P down, right? We got the S&P down. Here's our support level. Next support is pretty much this gap down here around 449. I mean, eventually I think we're going to just come into this area down here. This was the big gap up at 446. So I'm not saying, okay, sell off, but this could unless we get some changing news, I think we're coming to 446, right? I think we're going to come down to 446. If not, then we come down to 444. So we have a couple levels of support here. This was a big move high, lower, especially given that we had that nice move to the downside after all-time highs. So yes, this is a rollover period. We're probably gonna have a couple weeks. We could have a month of downside. I don't know. I mean, the earnings picture, I gotta wait till Apple reports earnings and to see the whole earnings picture before. You want to see a clearing of most of the data, right? You want to see the data clear out and then see price action. We have too many catalysts that could be positive or negative right now. That's my view. But in the short term, yeah, that's what we're looking at. The strongest support level is 444, though, right? 444 is our strongest support. And it's very likely we come down to that before we do anything else. 444, right? We're starting to see that here, and this could get uglier. So moving over to the Qs. Qs are actually at support. Qs are holding on here so far. They haven't broken support like the S&P has. Now, does that continue? I don't know. We're probably beneath VWAP. We got to look intraday to see how that actually plays out. But the Q's next support is going to be 372, 370, right? So, yeah, we gotta get through earnings. I think Starbucks did pretty well. They have a lot of growth in China. I didn't see PayPal. I saw, let me see, AMD is doing pretty well. AMD had pretty good earnings. And then who was the other big report? can't remember who it was, but we still have time. All right, so I am a bull on natural gas as it is sold 50% under cost. Yeah, natural gas got destroyed. So if you can catch that upside move, that's going to be huge. Natural gas can do triple, doubling. I'm just not a commodities guy, but you could get a long call on that gas and just try to capture it. Fed hike due to labor market unemployment too low. Unemployment's too low. Okay. So yeah, that's what it looks like for the Qs. All right, let's go over to Tesla. Tesla's breaking down, made a new low. This is the trend beneath 254, 255. I mean, it's probably going to slide back to 240, especially with the overall market this week. Looks like Tesla's coming back to 240. You got that bear flag, and it broke down from the bear flag. Oops. Right, so here's your bear flag, which is right into the right into that trend. And I'm not like extremely bearish. This could just be an overreaction. And earnings could, take us right back up. But we got to track the technicals to know what is the potential of the market. What could we be potentially looking at, right? And if we do break down, it looks like we're going to 240. I mean, 250 is a solid support, but the overall market looks very weak, and that would probably match the move if the overall market drops to where it should. Where it could go, the next strong support, Tesla likely back to 242. Still a lot of buyers in there. What Apple's looking like. Apple not really reacting that bad. So, I mean, it did have a gap down, but this is normal. So this is positive because you're not seeing a big, barf or this huge mega cap name. Microsoft at support. We'll see if it holds. Amazon still has to go through earnings, so we don't know how that's going to play out. Google pulling back. Nvidia. Ooh, Nvidia broke the trend. Nvidia broke the uptrend. Nvidia finally broke the uptrend. Still think buyers step in here around 440. We'll see how that plays out. All right, you have a good day too. Lucid. You like Lucid? Lucid Air Company. So what is this macro outlook? Fitch ratings, mild recession in Q4 of 2023. So I think this is the Fitch guys, right? And they're saying mild recession Q4 2023. Fed will issue one more 25 basis point hike in September. Okay. One more 25 basis point hike in September. All about this credit rating. Now, in the intraday, let's jump to the intraday. And then in the left-hand side, I got the IWM still up pretty good. The Dow looks like it's starting to recover a bit. Let's see, Dow 353. Yeah, Dow starting to recover. We're still beneath VWAP though. We're still beneath VWAP. So let's go to the intraday and see what things are looking like. Yeah, this is very bearish. So just looking at the intraday, very bearish price action for S&P. We did drop the pre-market lows pretty sharply. Came into resistance, bottomed here, coming back into VWAP. So if we can't get above VWAP, then it looks like we're headed for another, gap down and then a retest on 450. So that's S&P at the moment. Man, a lot of shorts are licking their chops. A lot of shorts licking their chops. 451, you could short S&P here. I mean, I'm not looking to trade anything right now, but it looks like a nice zone. Oh, the Qs look worse. The Qs are in a forming a bear flag way beneath support. So you get a strong bear flag there for the Qs. Let's see what the Dow looks like. Dow catching some volume down here. Wow, that was a lot of volume on the Dow. I mean, I don't think there's a news front on this, but Dow's still strong. I mean, that's some. I know this is just the ETF, but that's significant volume coming in for the Dow at that level. I don't think we're seeing that on the Qs or SPY. So it looks like a rotation into Dow. It looks like a clear rotation into Dow. Nothing else. It is Dow rotation. Look at that big green candle. Looks like Dow wants, and this is good. This is just more rotation happening, right? XLV. See if it stayed up, which is the healthcare ETF for the S&P. Break into new. So XLV is still pretty strong. It is filling a gap it got rejected from yesterday. Well, it filled the gap and failed, but XLV is up. So again, this is not like a super red market. I think it's just people are being selective, very selective here. But this is a breakout on XLV, right? Not going to get or healthcare, the S&P healthcare ETF. You're going to break out there. I want to see IBB. Is that also breaking out? This is the biotech ETF. It's not breaking out, but it is hanging in there. J&J. Can credit scores have a revision? Shoot, I have no clue. Oh, dang, J&J is trending. So it looks like, yeah, the healthcare sector is pretty strong. When are you getting back to trading? I don't know. I don't know. I'm gonna take these swing trades that I'm in right now, and like I said, I'm trying to create content. And trading just takes a lot. When I did try it in the past, it drained me a lot. So, and I don't want to just waste my capital. You know, waste my mental capital. I want to be focused on one thing. So for now, I want to keep going on the macro, and then I would say like once the market risks are out off the table, then I'll start trading again. Once I get a little more comfortable in what I'm doing, then I'll start trading again possibly. But for now, I'm going to take a different approach. I'm going to take the swing trade approach. And if I do, it'll probably be Tesla, SPY, SPY, Tesla, stuff like that. But yeah, I'll eventually dip back into trading. I just got to wait for it just has to align with my lifestyle right now. And trading, you got to be up early. You got to track all this other stuff. And I'd rather just do some swing trades, save my mental capital to report the macro Qs coming up, and then do some other stuff. Amazon. Oh yeah, Teladoc. What is Teladoc looking like? Oh man, Teladoc got crushed. Hopefully it can bottom out here. Oh, when I traded, yeah. I'll try. I mean, I like trading. Don't get me wrong. It's just not fitting what I'm trying to do right now. So, I'm adapting, doing different stuff. I'm selling some options, buying long calls, Tesla, stuff like that. But I'll get back into it eventually. So yeah, J&J's up. I mean, I know we just said that. J&J's up. Who else do we have in the healthcare sector? Let's see if UNH is up today. UNH is another big mega cap healthcare company. So yeah, it looks like healthcare is still okay. Dow's moving up, and those are big names in the Dow also. So definitely stronger than S&P. All right, so as we look at those charts, I'm gonna flip over to there's some stuff on Twitter I wanted to go over. The heck is going on? So yesterday, we did get Atlanta Fed nowcast forecasting 3.9%. That could be another reason why yields are climbing higher. Is well, if the economy is growing, let's we don't want to invest in the safe haven yield for treasuries. Plus, why do that when the treasury risk is higher from the AAA rating down to AA rating, and cash is yielding risk free. So GDP now is up, and that's good for the economy. That's going to be good for discretionary stock, for spending. It's basically a bid that the consumer will not stop spending. So, looking at the earnings picture, okay, 58% of S&P 500 companies have reported earnings for Q2, so a little over half. 80.8% beat estimates, analyst estimates so far, above the long-term average of 66%. I'm pretty sure it's above the 5 and 10-year average. Let's see. Year-over-year earnings growth estimates for S&P 500 is negative 5.9%. So we know we're in an earnings recession. We know that. But if you take out energy, it's only so if you take out, so energy is actually dragging down all the earnings growth for the S&P because it had so much earnings growth last year, and then the earnings fell because oil's down 50% on the year. So most energy companies, right, they're not having a whole lot of earnings. Other than that, I think the S&P earnings picture, the fundamentals are starting to bottom out. That's pretty clear. I think that is pretty clear there. We are starting to bottom out. By the way, what does Roku look like? Roku, oh, okay, Roku pulling back into some levels. Okay. I think people are looking at opportunity here, not running from it. So you are in that Tesla trade. Let's take a look at it really quick. Thoughts on Nikola? Honestly, to be honest with you, I really don't have a lot of thoughts on Nikola other than first thing comes to mind is trash. I used to short Nikola back in the day. It must have popped, right? And a lot of people are like, "Oh my gosh, Nikola's up a lot." I mean, it's a short squeeze. It's basically the combination. If you're not familiar with trading short squeezes, stay away from it. It's a short squeeze, trash company. But they probably refinance their debt or something, and there's a short squeeze, and basically the shorts are covering. They've made a lot of money. The bigger term chart for Nikola is nothing. Yeah, it's nothing. It's popping, right? 52 cents. It's up a lot. But if you're not familiar with trading a short squeeze, I mean, if you're planning on investing in Nikola, good luck. Those are my thoughts on it. I'm going to keep it real. I'm not going to be politically correct. It's trash. It's a trash company. It's not going to last. It's at this point, it's a trade meme stock, pretty much. So again, if you know how to trade it, good luck. But these are hard to trade. You got to watch the tape, and you got to take some risk. But that's my thought on Nikola. I don't really have much thoughts on Nikola. AMD is going crazy. Yeah, AMD. AMD. I thought that would have happened with AMD. It had that gigantic upside move after hours yesterday, right, for earnings, and then just dumped and right back to 109. That's what I was afraid of. This is why I was just like, nah, I want to wait for it to show some support at a certain level after earnings. This is why we always say don't do it before, like, don't get in before earnings. You want to wait to the earnings picture till earnings actually show you what's really going on, and then think about it. But this is a huge bear flag. That thing, I mean, there's a lot of support at 109, so I don't know. But if the Qs keep selling off, then AMD is going much lower. AMD is probably going to go back to 100. So this looks like the market's going to sell off for a while. We're finally getting that washout. You're getting a little bit of washout here. And it's not negative, it's healthy for the market. You need some washout at some point. You can't go up forever. But that doesn't mean we're going into a bear market. 100% Tesla is the only non-legacy auto here in 10 years. Oh, like that can survive? Yeah. I mean, I don't know. Maybe some others can survive, but that has actual juice in it. Yeah. And I'm waiting for the announcement, the full self-driving announcement. Not that it's going to happen this year, but one of the other OEMs, one of the other car companies, could be in China, could be in Europe, could be VW, who is already signing up for the license to license full self-driving. That'll be a big catalyst for Tesla. Also, you have Exxon now mining the lithium, trying to do business with Tesla, mining the lithium for all these EVs to profit, which will take away their, mining, which would remove a lot of the, the theories that, oh, they can't get enough lithium, but you have other companies who are going to do it for them to create that supply. Okay. But yeah, Tesla looks pretty bearish right now. There's still buyers who are coming in here at the open though. Like there's still a lot of buyers stepping in. So are they going to sell their Tesla stock? I doubt it. You're probably getting shorts pile in. They're getting excited. Tesla's breaking the levels, especially this move today. This move today was pretty nasty where you get that big upside move and it just, the whole candle just gets engulfed to the downside. And yeah, that's some bearish signals there. But you got to look at the overall market, what's it doing? And at the moment, the overall market is struggling. Has further downside. Man, this looks nasty for Tesla. You guys shorting it? Payments restart on government student loans in 2 months. Ooh, more risk. There goes more risk. So people are now getting fearful, and the shorts are coming in. So you think the markets will tank even more tomorrow? I don't know if it's tomorrow that they tank, but I think the way the price action is looking, which is why I love the price action, the way the price action is looking with the S&P beneath 450, it looks like it's going to trade, whether it's the next month, the next week, it looks like it's going to trade back to 444, right? 444 on the S&P, and we have the charts here on BlueTube. 444 looks like if maybe we go sideways, it tries to make a move higher, and then it sells off. But either way, the S&P, if it cannot hold 450, and that's sort of the last line of support here, 450, 450, then we're going back to, I mean, it's very likely, the probability is high that we go back to 446, because that was another gap, 444 for S&P. So maybe it holds up today and then rolls over, gaps down tomorrow. You don't know, but the probability is increasing. Excuse me, the probability is increasing that S&P is going back to these lower levels, 445, 446, 444 down there. And it's going to drag down. Look at the Qs are breaking. The Qs are breaking right now. So big tech is probably going lower. Tesla's going lower. Let's look at the Qs, Q. Trust me, there's a lot of people licking their chops right now. They're licking their chops. They're going to buy. They won't buy all at once, but they're going to average in on some of these plays. So you have a very clear support and resistance here for the Qs, right? There's your previous support, and now it's going to turn. Well, we'll see if it turns into resistance or if it just collapses. We'll find out. QQQ to 370. Yeah, that looks like the next zone, about 370 to 372. That's the next level for the Qs for sure. Correct me if I'm wrong, but wouldn't this be great to re-enter Tesla for cheap? Yeah, people will re-enter Tesla for cheap as soon as the macro improves. Like I said, there's a lot of negative macro forces on us currently. The dollar moving higher is not good. That signals immediate risk. We're back to 102. Oh, let me invert this again. So the dollar shooting up, and today had a big move, man. It had a big move today too. U.S. Treasury yields making new highs. So this is a really risk-off period. Like it aligns risk-off in the short term, right? The positive is oil is selling off, so your inflation risks are reversing away from the yes, financial conditions are tightening, right? Which means less credit in the system, but inflation risks are evaporating, right? They're starting to evaporate. And I know I'm using a little exaggerative language, but that's what I do. And the inflation risks are evaporating. Oil made that big move up, got rejected pretty hard. So that's good. So it's a net negative. We'll see when the CPI comes out, what it looks like. It's probably going to be kind of elevated too, because we had that big move to the upside. But yeah, and then we still have market breadth, right? Not utilities. Oh wait, utilities are catching a bid now. Healthcare is up, and consumer defensive stocks are up. So market breadth is weak. Oh dang, MSTR is down to 409. This thing is selling off hard. Okay, MicroStrategy. See, that's something I want to see. Once this bear market resolves, I want to see MicroStrategy, those options again. I want to check out those, revisit those options, see what they look like. But where was I going to go with this? Open doors down. ENPH. Oh man, I'm sorry for those holders for ENPH. ENPH is tanking even further. Carvana's up on the day. Another short squeeze. Oh, that's what I was going to do. Advanced decline lines. Yeah, let's take a look at that. So yeah, this is Tesla's price. Tesla looks like it's going to just get smoked right now. Back to 250. So the we can see here on this view, right? Ignore this stuff on the bottom. Actually, you know what? I should just take this off. Okay, vol is down. Advanced decline is down. I'm gonna put this at tick. Let's go tick here. It's more of an intraday thing, but I'll keep it there. This is more intraday. So on the top, what we have is 71% of companies are, S&P companies are trading above their 50-day moving averages, 74% above the 100, 67% above their 200 moving average. So actually it looks like this one's catching a bounce a little faster. So the market breadth is declining at the moment. We are declining at the moment in market breadth because we had such a strong run up, and now people are getting a little fearful, and people are taking profits. Like, let's keep it real. There's a lot of profit taking, basically taking place at this time. Ooh, Teladoc is not looking great. Not able to hold that level. Starting to slip there. QQQ 37. Okay, we got through that. Yeah, I think that's about it there. But we are seeing advanced decline pick up. So there is, yes, stocks are negative. This is basically your advanced decline line. And actually, you know what? I need to change this style. I just need the box. I just need the side chart. There we go. So advanced decline's moving up. Does it stick there? I don't know. We'll see. Definitely a rotation into defensive stocks or a little more value. SPY is barfing. S&P is finally starting to barf. But we knew this day would come. And keep in mind, we still have Apple earnings that could, turn this boat around a little bit. So we still got Apple earnings. We still have Amazon earnings. We have What are the other earnings that we got down the pipeline? Starbucks did do well yesterday, though. That was positive. Qualcomm. No, that's not. That was today. So we got Qualcomm after hours, Shopify after hours. Oh, PayPal's after hours. Okay. Ferrari lowered their guidance. They got smashed, I believe. Maybe I'm wrong. Tomorrow's the big day. Tomorrow afternoon, like I said, Friday's going to show us where we could just trade down in a Friday, down to those levels pretty quickly. So yeah, tomorrow could be a nasty day, and you could get sell the rumor, and then start buying the positive earnings, or maybe everything just tanks. Maybe we just tank completely. We don't know, right? We just keep in mind where the next buying levels are going to be at. And if there's real, systemic risk into the market, oh man, Tesla slipped hard there, 250, right into 250. Q's broke down. SPY broke down. SPY's kind of breaking down a little bit. Q's definitely worse. Dow's holding up. It's not great. It's holding up a little bit. Let's hear what Wall Street has to say about this. And I think really what it's turning out to be is the earnings bottoming could have just started the last cycle, which means that maybe we're seeing maybe we're seeing that the market has bought into earnings bottoming already, and it's already priced in. That could be the case too. My thing is there's so much cash on the sideline with earnings beating. I don't think people keep selling. I think they start buying more. A lot of cash on the sideline for professional fund managers. So they need to see the macro fall apart, and that's not happening. Macro is not, just because yields are up a little bit, that just makes them put more cash into fixed income, which generates more cash. And inflation's coming down. Market forecasts. Is this China? Oh, here it is, 2023. All right, so Bank of America Merrill Lynch, Savita Subramania, S&P end-year target. So S&P end-year target, you have Bank of America at 4,300, so lower from here. Barclays 4,100, lower from here. Bank BMO, Brian Belsky 4,500, pretty much where we're at now. CFRA, appreciate the love, big man's coming. 4,500. Citi 4,600. These estimates have been going up, by the way. S&P estimates are going up. End year targets. Credit Suisse 4,700. That's a big bump. Deutsche Bank 4,500, pretty much where we're at. Evercore ISI 4,450, a little lower from here. Goldman Sachs 4,500, pretty much where we're at right now. I'll put SPX up so we know what we're looking at. We're currently at 4,500 at the moment. Russian unemployment rate, who cares? JP Morgan 4,200, so they got a pretty low target. That's the lowest we've seen other than BMO. Barclays. Morgan Stanley 3,900. That's Mike Wilson. He's still calling for the 3,900. That's a big pullback. If he's right, then stocks are going to get crushed. Oppenheimer, they just upped it yesterday, 4,900. That's new highs on the year. So these are there's not a whole lot of agreement here. There's not a whole lot of consistency. UBS 3,900, Wells Fargo 4,100, RBC 4,250. EPS, I mean that's relative. We'll see. I don't know where EPS is headed right now, but who has the highest EPS target? 185 for Morgan Stanley. Yeah, I don't know. I think EPS just comes in stronger because of the fiscal spending. If anything takes this market lower, back into a bear market, it's going to be inflation breaking back out, rates making new highs, the dollar breaking out. I think that's what it's going to take. But the economy is not really collapsing. There's no sign of it. Yeah, these are 2023 end of year goals. Do you think the downgrade from AAA to double grade to AA is just another reason to give bears the pullback on SPY? Yeah. I think it's another reason to cover, because I mean, even if there's fear in the market, it's up a lot since we're up so much. It's going to cause people to take profits. Wall Street's been talking about, we're overdue. We're due for a correction. The traders were due for a correction. And it's another reason for the bears to jump in, and that's fine. But until you really break the uptrend, there's not really, it's not a reason to get completely bearish. But of course, they're going to say that was it. That was the top. They've been saying this for a while. But now the S&P is back into if you believe in trends, we're back into the bull market trend. We got a little overextended there for sure. RSI is coming back down. That was a big dump on the RSI. Let me go to the weekly. See on the weekly chart, still pretty elevated on the weekly chart. I'm going to throw on the quarterly moving averages to see where the last couple quarters of earnings would take us. Hey, we already saw that. What is this? Yeah, and they just the downgrade was put on a negative watch. They put a negative watch, which is just like, we're going to keep our eyes out to see if anything improves. Well, I bet Janet Yellen comes out today or tomorrow and talks about this. I bet they do an interview to restore stability. All right, let's go to the weekly. I love dips. Haha, yep. Gotta love the dips. I mean, it feels like crap if you're already long and you're hurting. Why did this thing go back so far? But investing is all about strategy. What is your strategy? What is your time frame? Oh, what am I doing? I could just double click this. There we go. All right. So the quarterly moving averages, last time we had a pretty sharp sell-off. We had been supporting that last. Yeah, so this points to about a 44 by the time we get there, about a 4,400 S&P. About a 4,400 S&P. That's the major support, it looks like. That's a pretty sharp drop for people. That's going to be a sharp drop for people, but you do have support there. So 43, I don't know about 43. That's kind of extreme. Let's go to the daily moving averages and see what those are looking like. Same thing. Yeah, 44. So that's where the biggest support is at, about 44. 4,400. You love to buy the dips. Yeah, if you're dollar cost averaging, it's perfect. It's pretty much perfect. 44, 47. What is this guy saying here? Yeah, Friday is going to be big, man. I think Friday is going to be the deciding factor. We could sell off sharply into Friday, or you get, because you don't get the market react to Apple, Amazon earnings until Friday morning. And you also have unemployment rate, non-farm payrolls, wage inflation. People have cash. So maybe it's time to look at some downside trades. What are some good trades? I think even though I'm a Tesla bull, the setup for Tesla for the downside actually is pretty clear. You're at 250. This thing is hitting hard. 250. Next support around 240. But it is coming into that 50-day moving average. I don't think that really matters at this point. It's a lot of people shorting Tesla. 241. So if Tesla can retest pre-market lows at like 252 and then fail, I mean, could swing that. Dang, another 300%. When things go red, they go red. So you're smashing it, man. Keep it up. How do you feel? How you feeling about that trade? Or those last couple trades you had? What's the imbalance for short entry? I don't even know what that means, to be honest with you. The imbalance. Oh, okay, yep. Feeling disciplined, lost a lot to get to this point. This is just the start, 100%. Just got to stay, you really just got to stay disciplined for sure. Got to stay disciplined. Man, Amazon's getting crushed. Okay, let's see what these guys are saying here. Bidenomics. Somebody said that Bidenomics is Bidenomics is ironically pushing yields higher, which is kind of funny. It is holding the economy up, but at the same time, it does push yields a little higher. You need inflation to collapse to get those yields down without pushing rates higher. Look at the highs. Major imbalance, look at the highs. So like the highs for Tesla, 259 on the day. I honestly don't know. I'm not familiar with that. Those okay, so 259. ATR, it's a $9 move to the downside. I don't know what the ATR. The ATR is, what's the ATR in Tesla? Advanced decline is still climbing, so pretty positive. Oh, okay. All the highs after 259. Yeah, keep up your trading. So that's Tesla. Who else do we got? AMD. Let's see what AMD is looking like. Let's run through. Let me go to the restroom real quick, and then I'm gonna jump through the mega caps, and then we'll finish it off. I'll be right back. Oh, I still had a lot of coffee. All right, so yeah, AMD getting crushed. Glad I never held that. Still has a lot of room to fall too. Let's go to the 15-minute. Nvidia sharp sell off. Wow. There's probably a lot of people unleveraging too. 434. Nvidia broke the trend to the downside. Let's go to the 30-minute actually. Next support for Nvidia is about 424. Man, this could have been a nice short day. See Apple. Apple still has a lot of demand. See Meta selling off back into support. Netflix 310. Yeah, Meta is going to get bought up. It's not even back to where it was pre-earnings. Netflix also rolling over a bit. AMC, no, I'm just kidding. Who's messing with AMC? AMC, I know a lot of people got trapped on AMC. Pop for no reason. And GameStop, what does GameStop look like? I haven't looked at this stock. The biggest short squeeze in history. Yeah, that was a crazy short squeeze. 120. Oh, try managing trades closer instead of chasing and increasing the shaky hands. Yeah, makes sense. Makes sense. I mean, the big level at 250, you wait for that retracement for sure before you got back into Tesla. CVNA, is this thing still actually Moving up today? No, okay, it sold off. All right, cool. J&J. See if that breath is falling apart. Nope, J&J still moving up. Now you don't want to go long when the market's short when it's weak, but that's interesting. Caterpillar's up. I mean, I bet Caterpillar's still not making new lows, so Caterpillar's up. At least go to the 5-minute. It'll be easier. 5-minute. And then let's see. So yeah, Caterpillar's still pretty strong. DE. Not really doing much. UPS. FedEx. I think a lot of this weakness is in tech. The heck was that? UPS, FedEx, FDX. See what FedEx looks like. FedEx still chugging up, chugging along. So yeah, a lot of this weakness again is in mega cap tech. I think it's you're seeing a rotation happen. 426 next level for Nvidia. That looks about right. That's Fibonacci, man. Ace. So it did fill, okay, that was a previous support. 426. Yeah, I'd say somewhere between 430. Trying to see your 426 level. Let's see 430 to 424. Gap to fill there. I mean, it could go lower. Who knows? But it's in that range, right? Somewhere between 420 and 430 for Nvidia, anyway. Had to stop my mom from buying AMC. Why would people buy AMC? Oh, short squeeze on RAD. Oh my goodness. Wow. What is this? Where is this coming from? They installed LED lights, so they're going higher. Oh, they're talking Tesla. Let's hear this. I want to hear this.
That volatility and sell those calls. I mean, Steve brings up a good point about the margins. The margins definitely have come down. Elon's been very clear. He's trying to get volume right now over price. He's also been very clear that ultimately self-driving is the most important thing to turn that switch on. I think that's going to take longer than he anticipates. And so I do think there's going to be volatility in the name. And so that's why I have my core position, but I think selling calls, you can collect a really fat premium for like 3 months, 10 to 20% out of the money calls. And then you kind of balance and naturally have that position called away if the stock runs up.
I mean, Steve, it's pretty interesting, right? I mean, volatility is languishing in just about every part of the market, except in certain names. And you could still get paid a pretty decent amount of money to sell options against a position in Tesla. I mean, you were making a point before. You were going to before I rudely cut you off about.
Yes, you did with a multiple choice question, which is very unusual on this show. Yeah, usually, what are you doing and why? Not laying out ABC.
There you go.
I don't think Britain needed any help in the options.
No, not at all.
But Britain executes her strategy consistently and brilliantly. But yeah, I've got a question on the margins on Tesla, and I don't believe it's a big position in Joe T. But but they are coming down, but it's by design. It's not necessarily, I do think it's from competitive forces. I mean, look at the Tesla car. It hasn't changed since launch, right? New models, same car. You have some incredible options out there that I think are much more attractive looking, that are not as austere internally on the insides. So ultimately, competition does hurt. But I'm just going to give a commercial here. I'm not the most gratuitous person in the world, and that's never going to change. But the reason I own Joe T, because as you heard him lay out his strategy and the logic for his moves, just very, very disciplined investor. And I just advise anybody who's watching that go through the same questioning of any manager that you hire, any fund that you're in. Ask them their discipline and let them provide to you, you know, the facts on how they've exercised that discipline, and most importantly, didn't stray from it.
Right.
So
yeah, so I think what's important, what Stephen is saying, and Stephen was asking me about the margins at Tesla, right? Just again, going back, a single factor of momentum is insufficient, in my opinion. And you, Dom, you and I know there's billions of dollars that invest in that single factor. I want to study the balance sheet, okay? So margins are not something that are in the rules. We don't prioritize the margin. We prioritize return on equity, debt to equity, and revenue growth over the last 3 years. And it's interesting because now we basically own all the mega caps except Amazon. And
you led me right to it.
And one of the reasons, and the main reason that we don't own Amazon, look, if you study Amazon performance-wise, momentum over the last year, it underperforms all the other mega caps on a one-year basis. It's basically flat or down somewhere around 1 or 2%. But now let's look at the balance sheet and the metrics that we follow on quality. It has a negative ROI. The debt to equity is actually not that strong. So that's why Amazon is not yet in the strategy. It might be at some point, who knows? It's been there before, it could be there again. But that's where you elevate the importance of fundamentals, quality, and you do that in rules, and you try and improve upon momentum.
I love it, only because, you know, in a former life, I worked for a quant fund company doing multi-factor models.
Yep.
And you stay with the strategy.
Okay, it's kind of boring. I thought they were going to say something more intuitive here. So it looks like, just FY, the advanced decline line is picking up. It is for the last, if we look at the last hour, and I'm still looking at Rite Aid, you got the support there at 250. Looks like it's going to break down. But 250 is VWAP. So Rite Aid, I mean, I'm not, this is a dangerous trade right here. I mean, this is a dangerous trade. You really got to take, you know, you got to really take a drawdown to get long this name. But what I was going to say is that the advanced decline line is up now. It is above. So this is it right here. We're above where we were at the open. So stocks are actually recovering in a broad sense. Stocks are already recovering, right? We broke that downtrend. Stocks are starting to recover. Not every name, but stocks are starting to recover in general. So we did have that reversal there for the New York Stock Exchange, or for most stocks advancing versus declining. Amazon is getting crushed. And you just heard him say something negative about Amazon too. It's crazy. Brad probably going to get crushed here. Heat map showing greenies. Oh, you see the greens on the heat map? Yep. Got some greens on the heat map there. So that's why I like to keep that advanced decline there, just so I can see, well, what is the market? It feels very negative, which it is, but it's not telling the whole story, right? You got Dow down here. Dow is still, you know, climbing the VWAP. There's some stocks getting bought up. Mostly tech is taking this crack. Look at looks like Qs are going to drop again. Big flush, and I agree, Ace. We got to have a pullback at some point. And the real question is, where do these? Oh, look at the buyer stepped in at 250 for Tesla. Could be a reversal. No, I'm just kidding. You can't hope for that. If the market keeps selling off, it's going lower. AMD, what else? Let me double check on mine. I'm looking at Teladoc. Had some weird price action this morning. I mean, not this morning. Had some weird price action earlier. So I don't know what this is. Big buyer stepped in or what. But It slipped pretty low and then came back up. So I'm looking at Teladoc. This is my zone right here. Below this zone, I have to cut my losses on Teladoc below this zone. So I'm going to give it some time. I know there's some buyers in there, but if we get below this consolidation, it's not looking good. Below 25.50, right? 27.50, it needed a hold, but I'm not really sized in. If I had size, I would take that off. But I'm gonna let this, I still got time. It's a 2025. I mean, I'm sorry, yeah, it's a January 2025 call. So I have time on the call. I just don't want to get I'll buy it lower if I have to. ZM. Yeah, I do have Teladoc leaps. Which is why, yeah, like I said, oh, you probably said that earlier, huh? Yeah, I got the leap, so I mean, I'm not really paying too much attention. What is this? Is this breaking news? What's going on here? Light Q3 guidance. So AMD did have light guidance. I didn't even see their guidance. I didn't hear about it. Damn, that's crazy. I didn't even know their guidance was a little lower. So ZM also pulling down, got the leap on ZM. Still in play there. If you are sized down, I'm a single contract guy myself. Yeah, I'm just looking at one contract until I see real market momentum come in, which I'm not seeing yet. Advanced decline still pulling in. Man, Amazon's getting crushed. Google, Roku also is going to be interesting because Roku had that big beat and you saw that volume come into Roku. And I mean, Roku was up 30% over the past like 4 days. So now that it's down, I think buyers come in here. You got 89. I mean, if the overall market bounces, right? 89. Either way, you have a lot of momentum for Roku. So if it does come back down to 77, 78, 80, it should be nice for Roku. Open Door. Is it getting crushed yet? Because this thing has been on a rampage. Open Door has been on a rampage. Still looks pretty solid. Palantir. Palantir back to 18. Man, Palantir also on a rampage. Palantir back to 16. Pretty nice risk reward. I had ZMT Doc made a little, should have shorted, but I had a shaky hands and calling level markets. Oh, you cashed your leaps in. Okay. Yeah, they were pretty nice. I'm just gonna let it ride though. I'm gonna let it ride, see what happens there. I think the market's just pulling back. I don't see no systemic risk yet. I think the market does, whether it's after earnings. Well, I think the end of earnings will coincide. I'm pretty sure earnings do bottom. So what's the next catalyst to kind of even out the negativity is going to be inflation. The inflation picture, right? So the next CPI. I'm not too optimistic about it, as in a very good beat because oil prices went up so much. But if they do happen to be below 3%, that's going to be interesting because shelter is rolling off, right? But it does look shaky. This month looks shaky. August, September is probably where the most fear comes in. You saw RSI divergence, what, on the daily chart or intraday? Oh, yeah, you got some divergence there. I can see it. Has to bottom or going lower. What up, Dimash? money ready for that. Okay. The daily chart. Oh, I think it's called the falling knife, right? Well, SPY is showing some bullish divergence, but this is a 3-minute chart. I gotta go to like the 15. Not really, still weak there. Daily chart on the SPY. The daily chart on the SPY is, you said bullish divergence? Or you just saw divergence? So you're probably talking about bearish divergence on the SPY. Yeah, there was bearish divergence. We've seen some bearish divergence for sure. Because you had the new high here. Yeah, the new high here and here, which were much lower than before. So we're starting to pull back. Oops. Now taking a look at the volume too. I'm going to look at this volume. Let's go to SPX. Oh yeah, there's no volume on SPX. What am I thinking? Q volume, that's elevated volume. New lows. Yeah, it looks like we could have, looks like we're looking at where the bottom is. Where's the bottom going to be in SPY? Is there real risk coming in to risk a bear market, or is this the correction? I think it's just a correction. Looks like it's just a correction. Oh, they didn't listen. Okay, so you saw that bearish divergence. Yeah, when you get the bearish divergence, over time, it usually plays itself out. Less buying power. Buying pressure. Less buying pressure. Price action is making new highs, getting a little overextended. So yeah, it looks like on the heat map, you do have consumer and healthcare defensives, consumer defensive and healthcare that are still green. Come on, Taladoc, it should recover then. What up, Dimaj? What up? Okay, cool. Well, I mean, I think we're at the end of the stream. I gotta get some stuff done. I gotta get going here, but let's make sure we didn't miss anything. This could be the start of a bigger correction for sure, 100%. We could be looking at the start of a bigger correction. We still got to get through Apple earnings. I think Friday will give us a little more insight to how things are going to play themselves out. And that AAA rate, here's the chart that I think really spells everything out. So I'm going to jump to that chart as we close out here. And what it is, here we go. The federal debt expend. So these are the interest rates for this is really what the AAA rating is. I'm sorry, the downgrade is about. The downgrade is not about, oh, we're keeping track of what you guys might do. The downgrade is government interest payments right now are almost at $1 trillion. So they're not just at all-time highs trending, they exploded higher. And the question is, can they continue to pay this interest? And if they do have to keep this up, it's going to pull from GDP, right? So all the GDP we are starting to see is not going to contribute to growth. It's not going to contribute to growth because, the government has to turn around and pay the interest on the bondholders. And they have so much interest to pay that it's going to drain the banking sector. It's going to pull liquidity out, right? So there's all these factors that should be negative. And I think one thing that we need to pay attention to, let's see if I could find it up here. I like the site. Is it a USRRP? Let's see. Reverse repo facility, not the 7-day. Where's the reverse repo facility? Actually, I think I could pull it up on here. Overnight reverse repo facility. All right, so this is where I think the liquidity comes from. Can it happen? I don't know if it continues, but this is where a lot of the liquidity is at in this reverse repo. We still have $1.7 trillion of reverse repo liquidity. And if this liquidity drains, then it could go, basically you want to see this liquidity find its way into the US Treasury account to pay off that interest for now. And the big catalyst is inflation. If inflation continues to decelerate and we head more for a recessionary period, right? Yeah, that's okay. Even if growth keeps slowing, that's fine. Then what happens is the Fed can turn on QE again. So I think it's going to be neutral. It's going to come down to earnings and stock picking, not just everything crashes or everything just goes straight up. I think it's going to be stock picking. And stocks are pretty resilient. The economy is pretty resilient. It's time for a pullback. We're getting that pullback. We're starting to see that pullback now. And it's necessary to continue the bull market. So when we look on this chart, we see that we're just pulling into the trend. If we break the trend, we have another line of support at 444. If we break that, we got another line of support. But the bull market trend is still higher. If we take the original trend from the lows, right, we still have a lot of room. Now, that would be kind of nasty if we came all the way back and consolidated into October. This is possible too. What if we come back down and we stick to 430 all the way till October? That is very possible. If the dollar keeps surging, if oil stays elevated, if yields stay elevated, it's very possible that the market just trends sideways, right? Now, to break and go lower, I doubt it. There's no reason that we should break under 4,200 or 420 for the S&P. But you're going to hear it. You're going to hear S&P back to the lows, S&P 3,900. Not with earnings beating at this point. All right. Well, I'm out of here. Appreciate you guys. Stay blessed today. Don't get too off guard. Dollar cost average. Stay patient, though. Let's watch the price action. Let's see how this thing rolls over. Everybody's talking about the AAA rating, the negativity on the bond market. And we're going to keep our eye on bonds to see if those yields actually move higher. So it's going to be the dollar that we keep track of and the 10-year yield. The macro forces are coming into play. They are coming into play. So what are they going to tell us over the next couple of days? All right. All right. Thanks, guys. Later, Gator. Yep. You guys stay up. I'll catch you guys later. Don't forget to exercise. Don't forget to exercise. Get your diet on, right? Stay positive. I know it feels negative for some people. Stay positive. And we'll be back tomorrow. And we'll check out the earnings. The what do we have tomorrow? The macro, we'll go over all of that and find out where the technicals take us. All right. And if anything's new, I'll send it out. There's still a lot of data coming out. There's still a lot of if I see a good take, I'll push a video out on YouTube. I'll push the video out on YouTube. So I'll push that out if we see that. All right, guys, you guys take it easy. We'll catch you later. Peace out.